Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a great weekend. Last week we saw the DXY selling off quite strongly at the end of the week, and this coincided with a sell-off in US equities. They dumped into the close. Now usually you only see that kind of price action with kind of forced liquidation or more of a panic. And going into next week, what's interesting is, as we're going to see in today's video, we do now have the Forex complex signaling a more risk-off regime coming in the markets. Okay, so quick look at the economic calendar. Coming into next week, we have three key pieces of data you have to pay attention to. We have CPI coming out on Wednesday, so don't be surprised to see the dollar pairs do nothing and then start moving on Wednesday. In fact, that's what I'm expecting. We also have on Wednesday a Canadian interest rate decision and an interest rate decision out of New Zealand, both of which I am looking to trade next week, and I'll show you in today's video how I'm looking to trade those events. But based on these three events coming out on Wednesday, I would anticipate next week a lack of volatility Monday and Tuesday, especially in the Forex complex, and then things to start moving from Wednesday onwards next week. So very, very important piece of data coming out on Wednesday of next week. Okay, so let's have a look at the scores for the coming week, and there are still some clear long plays here where we've got substantial edge to the upside in being long versus weak currencies. But what's more important this week is the way the Forex complex here in the major scorecard is starting to play out. What we're seeing is we are seeing the pound, the Swiss franc, and the euro all at the top or the positive side of the scorecard. We're seeing the US dollar, which is currently bearish to neutral, but is making its way this way. And at the same time, the Canadian dollar, a commodity currency, going this way. The Aussie is weak, the New Zealand is weak. So we've got the three commodity currencies now pulling down the weak end of the scorecards, while the more risk-off currencies like the US dollar, like the Swiss franc, are on the positive side, followed by, of course, the pound and the euro, which compared to the dollar and the Swiss franc are not risk-off. But in a risk-off environment, they will outperform the Canadian dollar, the Aussie dollar, the New Zealand dollar. So these kind of G10 European currencies will outperform the commodity currencies in risk-off. And so you might say, okay, what about the Japanese yen? The Japanese yen is the most risk-off currency, and it is very, very weak. Yes, but there is a very, very important change in the data this week. The Japanese yen, which has been the top short in the scorecards for pretty much most of this year, has now bottomed from -4 to -3. You can see the +1 over here. That is telling us that a near-term bottom, in all probability, is taking place in the Japanese yen. It doesn't mean we have the absolute low in the yen, but it does mean now that this downtrend in the yen is running on fumes. And with the US dollar, which of course is a risk-off currency, moving into the positive side of the scorecards or in that direction, with the Japanese yen bottoming and all the commodity currencies moving to the right-hand side, this is a clear overall regime shift into a more risk-off environment. So very important changes to the data this week. And this does have implications, of course, for other assets like commodities. It's bearish for commodities, and also stocks, bearish for stocks. If we're going to see a more risk-off regime coming in to markets, which the scorecards are pointing towards. So to cut a long story short, going into next week, I do favor the pound, the Swiss franc, the euro, primarily versus the Australian dollar, number one, because we do not have an interest rate decision in the Australian dollar like we do in New Zealand and like we do in CAD. And then I'm also going to be interested in New Zealand shorts and Canadian dollar shorts from the interest rate decisions. We'll look at those and how I'm looking to trade those next week versus the pound. So pound CAD, CAD franc and EurOCad, and also pound New Zealand, New Zealand franc, and also Euro New Zealand next week. Okay, let's have a quick look at the individual currencies before moving on to the markets themselves, starting with the dollar. The dollar did sell off quite hard after it broke down below the 2-year breakout that I've had on here for quite a while. However, going into next week with CPI on Wednesday, that is likely to dictate the next direction in the dollar. The dollar has been in a bottoming process ever since around April, and it's just kind of neutral at the moment. It's just kind of consolidated, contracting. But going into next week, I think the dollar's pretty much going to do nothing, and then it's going to likely move on CPI. So I am expecting a lack of volatility in the dollar up until Wednesday, and then I'd like to be more reactive on any dollar pairs, and we're not really looking at that many. We're looking mainly at euro dollar and gold and silver. But primarily I'd be looking to be reactive on the dollar if you're trading it next week. Next is the euro. Now the euro is pushing higher and it does look like it's going to retest the left shoulder over here, and this will become a decision point, because if we test here and we fail, especially on CPI, we still have this structure of the right shoulder here. But if we break through here with momentum, especially if we make a new high, that of course would signal a continuation of the uptrend, and then we could be looking for euro long positions, which we are going to be looking at in today's video, but even versus the dollar and other pairs like that. Next is the pound. The pound has been one of the best performing currencies this year, and it has also been projected in the scorecards to be a market we should really be looking at to the long side. And in fact, we've been pretty much long on and off the pound all this year. We haven't really been looking to short this at all, and you can see the outperformance this year. Coming into this week, this is going to also be decided by the direction of the dollar, and again, that's why CPI on Wednesday, even though it's in the US, because of the global reserve nature of the US dollar, is likely to dictate moves in these currencies as well. But I am overall looking to be long the pound, and I do like it versus the Aussie especially, but also the New Zealand dollar and the Canadian dollar after those interest rate decisions next week. Next is the Swiss franc. We've got this kind of bull flag breakout, tight consolidation, and then a break with momentum. And as many of you know, since the beginning of the year, all the way down here, I highlighted I was looking for the Swiss franc to come to the 1.17. I tweeted that out at the beginning of the year. And it looks like we're about to make that attempt now coming into the back end of the year. So I really like Swiss franc longs, especially versus the Aussie and the New Zealand dollar, and also, of course, the Canadian dollar after Wednesday. Next is the yen. Now the scorecards are projecting a near-term bottom in the yen. Now the yen could come down, it could double bottom. It's basically just saying that this is now running out of steam. Whether this is the actual bottom or whether we come down, we chop a bit and then we start to bottom. It does suggest, yen shorts are not the opportunity they were pretty much all the way down after the BOJ meeting where they reaffirmed yield curve control. So going into next week, I do not really want to be long the yen because it's kind of picking a bottom, but at the same time, any longer term shorts on the yen, this is giving us the signal to start to look to book profits. That's really what the scorecards are saying. If you go from -4 to -3, it's telling you to consider booking profits on Japanese yen shorts because we're running out of steam. Next is the CAD. Now, I have been looking pretty much all year for the Canadian dollar to come down to the lows, and we highlighted this as an A, B, and a C, and I did say to you before, this is a corrective structure in the Canadian dollar, and I am looking for it to break out here, although it chopped around and we were kind of not too sure at one point. It was kind of breaking down and breaking up. But once we traded into here, I did say to you in previous videos, I'm expecting this at some point to fail. And it does look like now, with the technical failure below the high over here, and at the same time, we saw that shift in the scorecards. We really saw a weakening in the Canadian dollar. I do now favor Canadian dollar shorts, and I am looking for the Canadian dollar now in the back end of the year to come down to this low, which we've been highlighting in previous videos for most of the year. Next is Aussie dollar. Now I have highlighted the really, really horrible pattern here, this kind of expanded triangle pattern. And although we've kind of been chopping around, I am still and have been all year looking for the Aussie to come down to here. I do think now, especially as we don't have an interest rate decision in the Aussie pairs, unlike the New Zealand and the Canadian dollar pairs, I think Aussie shorts are my favorite play heading into next week, and I do really like them versus the pound, the Swiss franc, and also the euro especially. If you get a stronger dollar on Wednesday from US CPI, there's nothing wrong with looking at Aussie dollar to the downside as well, although we haven't added it in to this week's video. And last but not least is the New Zealand dollar. Now the New Zealand dollar did have a major double top reversal over here, and it's still kind of trending down, although we've got this choppy price action. So I am looking for this to resolve itself to the downside. When you have a lack of volatility, which is what we've seen in the New Zealand dollar here, this is very often going to be followed by what? A period of volatility. And if volatility picks up, I am looking for the New Zealand to break to the downside. So it's taken its time. It has been very, very choppy, but I do still favor New Zealand shorts going into next week. And of course, with the interest rate decision on Wednesday, I would prefer to still be reactive on the interest rate decision as opposed to be predictive and trying to get involved before the interest rate decision takes place. Okay, so let's have a look at the markets this week, starting with crude oil. I cover crude oil every single week, and I have been noting recently that crude oil is not one of the best markets. It's very choppy, and on balance, I think there are better markets to trade. You can see last week, this blue box here, this is last week's upper area in terms of the range. So these green areas here are the projected range here for this market in all probability. And in terms of crude oil, I was interested in looking for shorts in crude oil, especially if we traded into here. However, we did it right at the end of the week. And instead of holding over the weekend, I prefer to come in and look for new opportunities this week. However, you can see that did hold crude oil last week. And because we traded into this, I would not be surprised to see this sell off a little bit at the beginning of next week. However, going into next week, based on everything I'm seeing, I do on balance favor long positions this week in crude oil. So if I am getting involved, I'd prefer to only look for bullish setups. But as I said, I do think there are better markets. This is not high up on my list. So I'm going to be looking for two things heading into next week. I'm going to be looking for a correction and a pullback from the upper test of this area from last week's video. If we start to correct like this, I'm going to be looking for a breakout to the upside and any potential long opportunities into the 77, which is the upper projected range of this market next week. However, if we don't break out, like last week, for example, we just kept trending higher, trending higher, trending higher into the upper area. If we continue to do that and we don't have a breakout like this, then I'm simply going to be looking in this area. If we come and test the 70 area, this would be an opportunity for a short-term move in crude oil. So you've got two setups here heading into next week for these markets. One on the breakout into the upper bound over here, or if we just continue to trend down into the lower bound, this is where you can start to look for short-term buying opportunities as well. Okay, so the first market we're going to look at here is Pound Aussie. This is my favorite market heading into next week, and Aussie shorts are my number one theme because it's a very good currency to look for potential shorts in next week, and we do not have the risk event like we do for New Zealand and the Canadian dollar. Last week, this was highlighted as a good opportunity to look for longs, and you can see the breakout, and we traded right into, pulled back, broke out, pulled back, and this is the kind of breakout looking for intra-week. If you want to trade these intra-week, you break out, you pull back, and then we rally. And where do we stop? Right at the upper bound of last week, and that is there to say if you're long, if you buy on the pullback, for example, and you get long, this is the max profit taking area. This is where you should be looking at booking your profits on any long. So that was a great setup from last week's video. Coming into this week, I'm looking for the same thing. I'm looking for a correction and consolidation, a pullback. And if we do pull back, I'm going to be looking for bullish breakouts into the 1.94. Or if we just continue to trend down into the 1.8950, this is an area I'm also going to look for potential long opportunity short term in Pound Aussie. Next is Aussie Franc. Now, Aussie Franc didn't do too much last week. I was looking for downside in this market. It was highlighted in last week's video. And again, you can see intra-week, although we did not test the upper area for a potential short, you can see we did break out. We broke out of the trend and we started to push down towards the lower bound. We didn't get there. However, going into this week, we've got this nice bear flag. So any pullback in this market is viewed once again as an opportunity to look for bearish breakouts into the lower bound at the 0.5860, or if we do not break out intra-week and we just continue to trend higher into the 0.6020, this is an area I'm going to be looking for a short-term short opportunity in Aussie Franc. And the final Aussie pair here is EurAusd. Any pullback in this, and you can see we've already kind of broken out here. So if we get a secondary pullback this week and we start to break out to the upside, this is going to be an opportunity intra-week to look for into the 1.6550 area. Or if we fail to break intra-week and we just pull back, we have a nice big A, B, and a C. This is an area, the 1.620. You can also start to look for potential long opportunities for short-term trades in EurAusd next week. Okay, so moving on to the New Zealand pairs, starting with Pound New Zealand. And we saw in Pound Aussie just now a really nice setup intra-week where we broke out and traded into the upper bound. Here is an example from last week. I was looking to be long last week in Pound New Zealand. In last week's video, it was presented. And you can see in Pound New Zealand, we did not break out. We did not break out last week. We just were trending down, trending down, trending down. And we came all the way down to the lower bound. And remember in last week's video, it was either to be long Pound New Zealand or do nothing. Shorting Pound New Zealand is not an option. Trade into the lower bound, and that was the opportunity to start to look for a short-term rally in Pound New Zealand. This was a great opportunity from last week's video if you're looking to be long this market. Coming into this week, what I'm going to be looking for is I'm going to be looking for one of two things. We do have the interest rate decision on Wednesday, so this really is an interest rate decision play from Wednesday onwards. I'm looking for the market to pull back and consolidate, and if we get on the interest rate decision a break higher, I'm going to be looking for a pullback intra-week and a follow-through into the previous high of the 2.0900. However, if we consolidate and on the interest rate decision, and this is where you can be reactive to price instead of being predictive of the event itself, because really anything can happen next week on the interest rate decision. If we sell off, if we just consolidate, we move sideways, and then we sell off into the 2.040 area, this is an area you can look to potentially fade that interest rate decision if you don't get a very, very strong, unexpected, bullish surprise in the New Zealand dollar. Make sense? So if it comes out consensus or it comes out just a little bit hawkish, but there's no real surprise, that's an opportunity to look to fade those interest rate decisions. But let's say, for argument's sake, hypothetically, if the Central Bank of New Zealand came out, and raised interest rates by 150 basis points, it's not a good idea then to step in front and try and fade that, right? Because it's a very, very unexpected bullish catalyst for the New Zealand. But assuming we just get some volatility and maybe even just a consensus interest rate decision release, I would be looking to trade this either on the breakout for a follow through or a pullback into the 2.040 area. Next is New Zealand franc. Now this was a market highlighted in last week's video, and it was highlighted for you can either short or do nothing. At least that was my trading plan last week. And we had a really nice move into the upper bound here, highlighted in last week's video. And look at the sell-off we got here. And I actually traded this, and I discussed this with members. This was one I traded in real time. And we had this sell-off, and it was a really, really nice move last week. And in fact, last week was a bit of a quiet week, but New Zealand franc was a really good short, highlighted in last week's video from this upper area. Coming into this week, I'm again only looking to be short or do nothing in this market. Buying is not an option for me this week in New Zealand franc. So what I'm looking for is a consolidation. And again, if we break out to the downside on the interest rate decision, I'm going to be looking for a pullback and follow through down to the previous low at the 0.5450 area. But if we just consolidate, plan B here, and we rally into the previous high, maybe even into this high, on what's generally just a consensus report, and there's no real reason for the New Zealand to be so strong, this would be an opportunity, maybe not straight away, but maybe Thursday morning, to step in and see if there's an opportunity here to fade this to the downside for a short-term trade. Just as last week we bounced from here, and that was a nice short-term move, I would be looking for that again post-interest rate decision if we rally into the upper bound. And the final New Zealand pair here is Euro New Zealand. So again, I'm looking for this, and look at this kind of double bottom down here. It's a little bit deep, so it's not perfect, but we do have a really nice momentum rally. So if we consolidate and we get this contraction here, this pullback, this kind of flag, and then we break higher, because I'm only looking to be short the New Zealand dollar or doing nothing with it next week, any pullback after the interest rate decision, I'm going to be looking for a follow through into the 1.78750. And remember, you're not going to be able to trade all of these markets. We're setting up, it's a plan. We're going to take the opportunities as they appear. You're not going to be able to trade all of them. We're just looking to trade a handful of markets sometimes each week, but the best ones. So if we get this post-interest rate decision for a follow through, or like the other markets, if we sell off after the interest rate decision, but there's no real reason why the New Zealand dollar should have strengthened, this is going to be an area you can look to fade the interest rate decision for a short-term rally. And the final Forex pairs here are the Canadian dollar pairs. And again, these are based on the interest rate decision on Wednesday. Really nice breakdown here with this head and shoulders reversal. And what I'd like to see here is I'd like to see a bear flag forming. And then if we can break down, because we get a bearish Canadian dollar off of the interest rate decision, I'm going to be looking for a follow through into the 0.6630. And if we rally up, again, this would be the area, the 0.6760, I would be looking to potentially fade that interest rate decision. Again, I can either be short the Canadian dollar next week or do nothing. Buying the CAD is not an option. If it smashes through the upper bound and the Bank of Canada come out and do something unexpected, like raising interest rates, then maybe this is not something you want to step in front of and short. So in that case, I would just not trade the CAD pairs altogether. Next is EurOCad. So I can either be long EurOCad or do nothing next week. We've already broken out of here. So if we pull back and we start to break out on the interest rate decision for this momentum rally, I'm going to be looking for a pullback and a follow through into the 1.4680. Or again, if we just trend down and on the interest rate decision, we pull into here. And it's always worth as well, if you're fading an interest rate decision, look for it to test and fail a couple of times before really rallying. Don't step in necessarily right on the interest rate decision. Maybe wait the morning after if you want to fade these. And finally, we have pound CAD, a really nice breakout with momentum. So Any pullback next week, I'm absolutely looking for this intra-week perhaps to break out on the interest rate decision, because between Monday and Wednesday, this is likely to do nothing, just consolidate, low volatility. Then if we get that catalyst in the direction of the plan, I would be looking for a pullback and then long positions into the 1.720. And again, conversely, if we pull back on the interest rate decision into this area, perhaps retesting these highs over here, this would be the area I'd be looking to perhaps fade that, again, assuming there was no real extremely hawkish catalyst coming out of the interest rate decision next week. And the last Forex pair we're going to look at here is euro-dollar. Now, euro-dollar, I do like to the upside next week, but because we've got CPI, my plan is, or part of my trading plan is going to be to have setups which allow me to trade the dollar both ways, depending on what happens on CPI. And the first part of that plan is euro-dollar to the upside. The scorecards are telling me I can either be long or do nothing. So going into next week, I'm going to be looking for a pullback consolidation into Wednesday. And then on the CPI report, if we get a break higher, in other words, dollar weakness, I'm going to be looking towards euro-dollar for a follow through to the upside at the 1.1060. Or of course, if we pull back into here post CPI, you can look to fade it from this area for a short-term rally. So euro-dollar to the upside is the dollar weak part of my plan next week. In other words, if we get CPI, and for whatever reason the dollar sells off, I'll be looking to trade euro-dollar to the upside. The second part of that is going to be when we look at gold and silver. If we get a stronger dollar from CPI, not a weaker one, but a stronger one, instead of trading euro-dollar, because I can either be long or do nothing, shorting is not an option. So if we get a stronger dollar, I can't short euro-dollar. What I can do instead, and will do next week, is pivot towards silver and gold and look for shorts in those markets versus a stronger dollar if we get a stronger dollar from CPI on Wednesday. Okay, so wrapping up the video with gold, silver and Bitcoin, starting with gold. I am, as I said, only looking for shorts in gold and silver, and this would be from a stronger dollar, reactively, a stronger dollar from CPI on Wednesday, looking short gold and silver. If we don't get a stronger dollar, I'm going to be looking for euro-dollar to the upside. So assuming we get a stronger dollar on CPI next week, what I'm going to be looking for is a pullback in gold. And if we break down on the CPI report, I'm going to be looking for a pullback and a follow through into the 1885 area. Or of course, if we just pull all the way back into this area, perhaps test these highs over here, this would be an area you could look to fade the CPI report. But again, don't step in front of a strong catalyst in the wrong direction. You only really want to fade these moves if the event itself is a bit of a non-event. You know, if there's not really any beat or miss in expectations, it comes out pretty as expected, and you still get a rally into here. That's when you can look to step in and fade those kind of news events. Because otherwise, if you get a very strong bullish or bearish catalyst, you can get a strong move in one direction or another. You do not want to be on the wrong side of that. So be careful if you're fading these events. I would advise fading them really only if you get a pretty consensus report and nothing unexpected. Next is silver. So we've already started to consolidate, and look at this really, really nice pullback, testing the prior low over here, support broken, turning resistance. And we do also have a really nice bear flag setting up. You can see this is the momentum and this is the correction, the consolidation. So any continued pullback is simply viewed as an opportunity to look for a bearish breakout in this market after CPI. And if we get that, going to be looking for shorts down to the prior low down here at roughly the 2220 area. Now, of course, very similar to the rest of the markets, if we pull back to the upper bound over here, this is an opportunity to look to fade this market after the CPI report on Wednesday for a short-term sell-off in this market. And last but not least, we have Bitcoin. Now, because we've looked at two shorts over here and only one euro-dollar to the upside, so in other words, it's a long, but it's US dollar weakness, I would also be interested perhaps in Bitcoin to the upside on a weaker dollar. So very much like the other markets, if we pull back just like euro-dollar here, I am going to be looking for potential breakout to the upside in Bitcoin if we're looking to trade it into the 3200 area. Or if we pull back to the 28,000, this would be an area you could also look to fade Bitcoin for a bounce to the upside next week. I don't favor Bitcoin as one of my preferred markets. I would prefer to be long euro-dollar on dollar weakness, but this is also an opportunity which could set up next week and is worth keeping an eye on. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.